The price of power, how London's finance shapes everyday life. Most people think finance is distant, something that happens in glass towers, among algorithms and suits, far away from the real world. But the truth is much simpler and far more unsettling. The decisions made in the City of London echo into the daily lives of millions of people, often without them ever realizing it. Every mortgage rate, every electricity bill, every supermarket price is touched by the invisible hand of global finance. And London, more than any other city, shapes the cost of modern life. The influence begins with interest rates. When the markets in London react to global pressure, a shift in bond yields, a spike in inflation expectations, a sudden rush of capital, those movements ripple through the United Kingdom almost instantly. Banks adjust lending rates. Mortgage costs rise or fall. Families taking out home loans suddenly find themselves paying thousands more or thousands less, depending on decisions and trades they never saw. What feels like an economic trend is often a financial calculation happening deep inside the city. London's financial power also affects the price of housing itself. For decades, global capital has treated London property as a store of value, a safe asset. Wealth from around the world moves into London real estate, pushing prices higher, not because people need homes, but because investors need somewhere to park billions. That pressure spreads outward. Neighborhoods change, communities dissolve, and cities across the UK feel the shock waves of London's role as a magnet for global wealth. Even the price of everyday goods is influenced by the city. Commodities, oil, gas, wheat, metals, are traded based on expectations set in financial markets. A disruption in the derivatives market can raise the price of a loaf of bread. A sudden move in energy futures can lift household bills across the country. To the average person, it looks like inflation, but inside the city, it looks like a routine adjustment on a trading screen. The pension system is another silent link between ordinary life and the city's financial machinery. Millions of workers rely on pensions managed by large funds that invest through London's markets. When those markets swing, so does the future security of retirees. A market downer in New York or Hong Kong might reduce the value of a pension fund in Scotland or Manchester. Global finance ties everyone together, but London sits at the center of that web. Then there is the influence on government policy. When politicians propose spending increases, tax reforms, or regulatory changes, markets often react before any law is passed. The value of the pound moves. Bond yields rise or fall. The government suddenly finds borrowing more expensive or more affordable. What should be a political decision becomes, in part, a financial negotiation, because the city is where the world prices the risk of the British economy. This dynamic extends far beyond the UK. When capital flows into London, emerging markets feel the pull. When capital flows out, currencies collapse. A decision made by a hedge fund in Mayfair can impact inflation in Argentina or interest rates in South Africa. London's financial gravity shapes the world's economic weather. And yet, despite this enormous influence, the system remains largely invisible to the people it affects most. A shopper in Birmingham has no idea that the price of their groceries reflects positions taken in London commodity markets. A homeowner in Liverpool does not think about global bond traders when their mortgage payment rises. A small business in Leeds rarely considers how decisions made in the city determine the cost of borrowing. This invisibility is not accidental. Finance seeks efficiency, not visibility. The city thrives on being quiet, fast, and frictionless. Its power operates through mechanisms most people will never see. Clearinghouses, liquidity pools, repo markets, cross-border settlements, algorithmic executions. Complex systems designed for institutional precision, not public understanding. But beneath the complexity lies something simple. London's financial system touches every part of modern life, because money itself touches every part of modern life. The city does not just move capital. It moves the cost of living, the stability of households, the security of retirement, and the economic fate of nations. This creates a paradox. London is both the engine of opportunity and the source of vulnerability. It can lower borrowing costs or raise them. It can fuel investment or trigger austerity. It can create prosperity or magnify inequality. Its power is neither fully benevolent nor fully dangerous. It is simply vast and deeply woven into the fabric of daily existence. The next time you see a headline about interest rates, inflation, or global markets, remember that the story does not end on the trading floor. It continues in the kitchens, living rooms, and businesses of millions of people. The city's influence is not abstract. It is personal. Financial decisions become human consequences. In the next episode of Cinematic London Finance Chronicles, we explore the people who keep the system running. The traders, analysts, lawyers, bankers, and coders behind the city's silent machinery. The human side of global finance. Subscribe and continue the journey into the forces shaping our world.